Hello, everyone. Charles Moon here with TradingAdvantage.com, here with your daily market commentary. Very choppy open. I had written yesterday, I should have said that. I had written yesterday that exclusively we're looking for two things right at the open. One, we're looking for a big influx of volume, or two, we were looking for choppy conditions. The big influx of volume was going to showcase what the big money was gauging leading into the FOMC minutes, which I'll touch up on in a little second. The lighter volume and the choppy conditions, well, it's going to lead to basically people standing on the sidelines or a lot of indecision in the markets. Now, what ended up happening is we ended up rallying slightly and then we slammed down. So we slammed down, and it wasn't aggressive by any means, but we did press lower. And we never recovered. And that's the thing that we've noticed. When the markets go down now, there's very light recovery. And even when recovery takes place, there's more momentum behind the downside once it starts flushing again. And sure enough, you can see the markets. Today, we closed only several points off the lows. So what does that mean? Well, this is what I saw in the futures market. Last Thursday, I believe, or last Wednesday, right at the close, there was a huge amount of volume that jumped in on the sell side. And there was no recovery pop, there was no rally pop, there was no profit-taking pop that followed. So the futures market actually pressed lower at the close, which is very odd in 2013. In 2013, anytime that happened, there's an immediate bounce back, meaning there's some big money out there that was willing to buy it at the lows, take on that risk because they believe the market was going to bounce back. They're not doing that now. Buyers are actually clearing out of the way, and sellers are getting more and more momentum. In fact, you can see buyers reversing positions. And I can't obviously see the exact orders by each individual that's being placed, but you could just tell by the amount of liquidity that's jumping in on one side versus the other and the aggressive nature that's being taken. So seeing that, if pattern holds true, we should see a down play tomorrow. Now, I don't know how the Asian markets are going to play out, or the European markets could play out, or even how the European market or the European traders and the Asian traders trade the overnight session in the Globex for the S&P 500. But what I do know is that this same specific pattern played out on Thursday, and if it played out just like Thursday, we're going to see a pretty strong day to the downside tomorrow. Now, the FOMC minutes, you're going to face a lot of choppy, somewhat volatile conditions leading up to this on Wednesday. Again, the meeting comes out at 1 p.m. Central Time as far as the minute goes. And you should see a pretty dramatic reaction to this news. Now, why would it be dramatic? Why would it be more so than any other time? Well, it's really simple. We're going into September. The speculation is that tapering will be initiated in September. And if they could find or delve into some clues from the FOMC minutes that could gauge on whether this is going to happen or not, that's going to be the naturalized reaction. So if they clue in saying that the initiation of tapering won't be able to take place until so-and-so, maybe even like 2014 is what's being speculated, mid-2014 and 2014, end of the year to 2015, the market's going to rally and rally strong. I mean, rally really strong. But if they actually confirm, if they actually give off clues that tapering will be initiated by September, like it's being widely speculated, the markets will continue to drift lower. Now, I'm not sure if it'll absolutely slam down. That is a great possibility, but the expected trend is to maintain to the downside. Since we've brushed up on the 1700 level in S&P 500, we're down over 55 points. 55 points in a very short period of time. We have had very light recovery, if any at all, and we still progressively are moving lower. The Dow just registered the worst loss it's had in 2013 last week. So that's just showing you what the market is speculating, gauging, and feeling, and the way that they're looking as far as directionally moving into September. So if this continues, you cannot continue to look to the upside and try and play only the upside. You must be willing to short or sell in the market or only progressively look in that direction. Do not fight the trend. The trend is your friend. The directional play of the trend is what's going to garner you higher percentage profitability winning trades as opposed to the other. Going counter trend, if you're not in for short-term gains, you're more likely going to get run over. That is the wrong spot to be if the market is going to get very bearish here. This is Charles Moon with your daily market commentary. Follow me on Twitter, TA_stocks. You can also find us on Facebook at tradingadvantage.com and our YouTube page, youtube.com/tradingadvantage.com. Thank you and have a wonderful day.